Morning, folks. I was going to do this as a live stream, but I'm going to just record it as a video because I'm doing a live stream tomorrow. So if you're not subscribed and press the notification bell, make sure you do that. Live stream tomorrow, 2:30 in the afternoon, New York time. There's a lot of news coming out today. Let's have a look at it. Two really important bits of news, and then we've got the crude oil changes as well. But here's a key one: Fed interest rate decision, and that's much later on today, about 2:30 New York time. I don't think the Fed's going to change interest rates, but Jerome Powell will have a lot to say after the meeting. Half an hour later, that's what's going to move the market. But before that, we have the CPI numbers, and that's coming out at 8:30 a.m. New York. So we've got CPI, core inflation, all that sort of thing. The Fed obviously already knows these numbers, so that's not going to affect their decision, but it may affect the things they have to say after the meeting. So pay attention to all of that. And then tomorrow, of course, we've got the non-farm payrolls jobs report, another huge number. Right, having said all of that, bearing in mind that those will move the market dramatically, all of those numbers have the potential to create havoc in the markets. So be very careful with your positions, especially if you're trading at high leverage. So a quick run through on positions. We're short on dollar yen and short on euro yen. I'm going to look at the day charts very quickly on these and not too much detail. We're still below the 786 fib, but we're above the 618. Got precisely to the middle in between those two. We're still below there right now, and my general direction and feeling is as long as we're below this intervention spike high, the direction is down. But it can be frustratingly long and costly because there are overnight rollover costs because we're on the wrong side of the carry trade. Luckily, some of the other instruments I'm trading have positive rollover costs, so I'm hedging, in a way, the costs of these rollovers. So that's the general idea. Still short as long as we're below that spike high. We'll see how this plays out. Of course, these numbers this week are going to have a massive effect on the dollar. CPI, the Fed decision, Jerome Powell's comments, and then the non-farm payrolls tomorrow. These charts will all change dramatically by several hundred pips, a few percent, several hundred basis points, so be aware of that. Same thing goes for stocks. We're actually short NASDAQ. We've still got a small position on this, but looking to maybe touch the center line on the day chart. Let's have a quick look. All of these I'll update later on in tomorrow's live stream because that'll be post all of this stuff that we've had and just after the non-farm payrolls. So actually at 2:30, when the non-farm payrolls comes out, that's when we go live tomorrow. Make sure you don't miss it. That's going to affect these charts, and whatever you see on the chart right now will change dramatically. Here's the channel center line. Let's zoom out to see where we are in this big channel. A very long rising channel. At some stage, this is going to break, and rising channels normally break out eventually to the downside, even though whilst they're moving up, the trend is bullish. We're still in a very bullish trend, obviously. We haven't actually been above the channel center line for a long time now, which is also slightly bearish. We've got supports below in these two order blocks. Go and check those numbers out on the right-hand side of the screen when you have a chance to pause the video. So we're below the center line and maybe just perhaps rolling over. I don't know. We're going to find out this week, that's for sure. Same with S&P. Let's just fix that chart up. I'm not in any trade positions on S&P, but right now we've been below this channel center line since the middle of April. So also slightly bearish. We're not getting up towards the top of the channel. You could argue that we're forming now a tighter, narrower channel between the center line of the broader channel and the bottom of the broader channel. That is true. So we're now trading within this sort of narrower half channel, I suppose you could call it. And that's where we are at the moment. All of these will change in the next few days with the three big numbers, the CPI and the FOMC rates decision and the comments by Jerome Powell after that. And then, of course, the non-farm payrolls on Friday. That's tomorrow. Big surge on Apple. We were short on Apple. We hedged immediately. We broke above these highs. So we're now in the long side, but also the short side. And our hedge is only about $1 apart. So effectively it's square on Apple, nothing to be done there. But at some point I'll take profits on the long side and then start to build into the short side. The Apple AI story combined with OpenAI is quite controversial. I'm not too sure what to make of it. It looks like there are some protections for consumers, despite what Elon Musk says and some of the outcry regarding the integration of OpenAI and Apple Intelligence. I'm not au fait with the ins and outs of the security situation involving the integration of OpenAI and Apple Intelligence, and I have absolutely no clue whether it's secure or insecure or indifferent. I have no idea. We'll find out soon enough, I guess, whether the public has adopted this idea as being okay. It looks like, so far, they're happy. Big rally on Apple yesterday, so we've got some longs on that. We'll take those off at some point add to the shorts if we see this starting to move down. We're also short Nvidia at around about $115 post that 10 for 1 split. What's interesting here is we have this massive spike on my NASDAQ chart for Nvidia, spiking all the way up to about 200. I don't know if that's a rogue spike. It hasn't disappeared overnight. It's still there. I don't know if that's real or not. I doubt it, but it's messing up my charts. Right, let's move along to some other stuff and let's have a look at gold. So we took a fractionally small position long gold yesterday, about 10%. I'm not convinced that this is going to move up. In fact, it looks pretty bleak. Let's have a look at this day chart on gold, and we've broken down below that support, but we're holding that support. We do have a potential head and shoulders pattern forming, and if that does carry on moving in that direction, we could or should move up to about 2,330, 2,320 if we touch this sort of downward sloping shoulder line, and then move down all the way down to about 2,200 or 2,180. I hope that doesn't happen because we have gone long, and if it does happen, I'll have to hedge on a daily close beneath this level. We're also long on Bitcoin from near these lows. I've been adding in down on these dips. I think the lowest entry price we got was at 66,700 or 800. So we're just above that right now and hoping for this to bounce up and carry on up towards about 104. Maybe we won't get above 100, maybe in the 90s, but somewhere around about 100, plus minus 10%, let's say. I've got no trade on silver. That's looking pretty big. Looks like a sort of a downward sloping triangle, testing that 100-period moving average and looking pretty weak. Same with copper. Copper's actually interesting in that we had this massive move up and an equally dramatic move down. Now, copper is related to industrial production, electrical engineering requirements, and electronics. And if there is a drop-off in demand, the first place you'll see it is in copper. If there's a drop-off in industrial production demand. So that's not good news for the economy, not good news for copper. I'm not trading that either. Right, natural gas and oil. Quick update on natural gas. Well, I've now taken all of my trades off at $3 precisely and just waiting for the next move. I think we could get up to $3.20 or $3.40. We did gap down slightly overnight and we have what looks like a descending triangle. If I switch this to a 15-minute chart, that becomes a little bit more obvious. So there's the top of the triangle like that, and the bottom of the triangle is a flat line. That's a descending triangle. Doesn't look good for natural gas for the bull side. If we do move down, by the way, look at this 15-minute spike on this candle. Maybe we've got a bit of a bounce here. Then I'll be looking at the 4-hour chart for my targets. I did draw this in and put this up on X yesterday. We didn't follow this immediate path like this, but we still have potential to reach down into these sorts of levels. There's the 20-period moving average, 50, 100, and the 200's way below us. So we've extended a long way from the 200-period moving average on the 4-hour chart. Let's have a look at the day chart. And that's the same path from the 4-hour chart that I've drawn here on the day chart. There's the 20-day moving average. That's a really good spot to aim for, and we'd hope to hold above there. That's at $2.70. And below that, we've got the 200-day moving average, which we could reach, which is at $2.45 or $2.50 in that region. So I'm just waiting to see what happens next on natural gas, bearing in mind that we'll be rolling into the new contract in a week and a half's time, so we're going to have to play it careful with timing. We're also long URA and UEC, the uranium twins, and I won't cover that today. We'll talk about that in the live stream if you remind me. And finally, WTI oil, we're short on this. We've been short for a long time now. We went short there and we went short here. We're a little bit out of the money on this recent short as well. But we've been shorting for a very long time, and we've been shorting all the way from these tops, and we were shorting much before that as well. So generally, I've been short on WTI for most of the time in the last year or so, and I continue to look to see this move down into the 60s and maybe even 50s. The way it looks now is that we might have to retest these moving averages. There's the 100, 200, and the 50, and even the underside of this channel. I'm just moving this Fibonacci study down to encompass the bottom there, and notice that we've also got Fibonacci resistance levels above us here. At around about 79.80, that's the 50% Fib and the 50-period moving average. That's probably the best chance. And then we've also got the 61.8% Fibonacci at about 81.50. So any of these levels here, I'll be looking to add to my relatively small short position at this point and hope for this move down to continue as we follow this trend. And we're also long sugar, and I'll cover that in tomorrow's live stream. Make sure you're subscribed if you don't want to miss it. And if you want to ask questions and put comments in, you'll need to be subscribed to the channel too. Take care. See you soon.